Grace, are we live?
We're live.
Are we live? We're live, everybody. It is Wednesday, and it's time for another NuView Wednesday workshop. I've got a very, very special guest speaker that I'm excited to bring on in just a moment. But before that, let's just get right into some introductions. My name is Nate Hare. I'm the retail sales director at NuView Trust Company. I'm also a certified IRA services professional. What's that mean? It's just a nerdy term that they give people that know a lot about IRAs and retirement accounts. So what we talk about on this program is everything self-directed IRAs. So if you don't know what a self-directed IRA is, I will tell you what it is here in a moment. But there's a lot of cool things you can do with self-directed IRAs that you can't do with your normal traditional IRA at places like Fidelity, Charles Schwab, et cetera, et cetera. So what we're talking about today specifically is how can you use an IRA to buy real estate and use bank financing at the same time. That might sound like a wild idea to a lot of you who might be tuning in for the first time. Trust me, I thought it was a wild idea too, because I thought IRAs can just invest in stocks, bonds, and mutual funds. And when I found out that an IRA can invest in real estate and use debt to help it acquire property, it was just an eye-opening experience for me. So I hope that this presentation helps you guys out there think about maybe some different creative alternative solutions to your retirement assets. So we'll just jump right into it. First, just a brief introduction to NuView Trust Company, which is the company that I represent. We've been a self-directed IRA custodian since 2003. Reason why I have that on there is because we're not a new kid on the block. We've been doing self-directed IRA administration for many, many decades, and we have processed hundreds of thousands of investments where clients are using their IRAs, whether that's traditional, Roth, SEP, or even their 401ks, to invest in alternative assets like real estate. It's important to understand that not all self-directed IRA custodians work the same. So if you're looking for a self-directed IRA custodian to handle your transactions when it comes to investing in alternative assets, work with somebody that is experienced and understands the process. Currently, we have about 12,000 active investor clients that are all using their IRAs and 401ks and qualified plans to buy alternative assets. I'll talk about what those alternative assets are here in a second. And currently, we have about $1.7 billion in alternative assets under management. So, and we're continually growing on a day-to-day basis. So before we get into the actual topic about using debt, using bank financing to help your IRA acquire real estate property, let's first talk about what self-directed IRAs are. Self-directed IRAs, it's important to get this out there, it's not a type of IRA. Self-directed is just a marketing term. When you have an IRA or individual retirement account, that IRA follows the same set of rules no matter where your IRA is parked. So an IRA at Fidelity technically follows the same sets of rules that an IRA at NuView follows. The only difference is what those companies do as a business model. Fidelity's and Charles Schwab's of the world, they're licensed securities brokers. So they're going to restrict you from investing in things that they don't sell. Doesn't make them bad guys. It's just that's what they do as a business model. But it has no bearing to what is allowable in an IRA. It's only what they choose to sell you to put in their IRAs there. When you have an IRA at NuView, our account agreement with our client says you can invest in anything the IRS allows, but you have to pick the investment. We don't have investments to sell you. You find the investment. So what that really does is it opens up the spectrum of investment opportunities to people who want to invest in things outside of the stock market. So if you want to buy a rental property in an IRA, you have to have an IRA with a company that will hold real estate in that IRA for you. And that's why we call it self-directed, because we're not going to sell you the real estate. You have to find it out on your own. But it is a life-changing opportunity for people to grow wealth within their retirement accounts if they understand real estate better than they understand the stock market. But don't get confused on that term self-directed. It's just a marketing term. IRAs are IRAs are IRAs. And truth be told, most of our clients at NuView, they have IRAs here at NuView, but they also have IRAs at Fidelity. Why would they want to do that? Well, that's the way that you get real true diversification, is by investing in some traditional investments, but then also having the ability to invest in alternative investments through a quote self-directed IRA. Now, what are the other advantages to using an IRA to buy alternative assets or any asset really is the tax savings that IRAs give us. Whether you're using a traditional IRA where all of your profit is completely tax deferred, or you're using something like a Roth IRA or an HSA or a covered education savings account where the profit grows completely tax-free. These are all the types of accounts that we have here at NuView that can all be, quote, self-directed and invested in things like real estate or cryptocurrency or investments into promissory notes or investments into private equities. The list goes on and on. These plans here can invest in anything outside of just two investments: life insurance contracts and collectibles. Those are the only two restrictions when it comes to investments within your IRAs or qualified plans. So what you use NuView for, we hold all the weird stuff. We hold real estate, we hold all types of real estate, land, multifamily, commercial property, single family. We hold passive investments where clients use their IRA to invest in notes and all sorts of things. So it's okay to have as many IRAs as you want, but have an IRA with a company that fits your investment needs. And we fit the investment needs for people who are investing in things like this. Like I mentioned, real estate through foreclosures, tax liens, apartments, real estate options, condominiums, unimproved land, commercial property. These are just some of the most common investments that we see here at NuView. Again, you're not restricted to just this, but we see clients invest in promissory notes. And a lot of those promissory notes are secured by real estate, or they invest in a private entity like an LLC or a partnership, and maybe those entities own real estate underneath it. And again, I don't focus primarily on real estate, but since we're on the topic today about talking about using bank financing to buy real estate, let's just keep it right down the lane and just talk about real estate here in a sec. So, but remember, you're only restricted to two investments that are not allowed in an IRA: life insurance contracts and collectibles. So what I want to do now is I want to bring on Matt Allen. Matt, are you with me there? I see your screen. If you can unmute yourself.
Sure. Hey, how are we doing?
First, I want to thank you for taking some of your time. I know you're a busy guy, being the VP of Business Development at North American Savings Bank. But I will tell you that we appreciate everything that you guys do for our clients, because we have a lot of clients that turn to North American Savings Bank as really being the leader in the industry when it comes to non-recourse loans to IRAs. And I always remind people that I can never endorse or promote anybody's products or services, but I could speak facts, and I can say the majority of our clients use NASB because they're familiar with the industry. Matt's written a book that was one of the first books I actually read when I got into the self-directed IRA industry about 10 years ago. It's a phenomenal book. So they really understand how these non-recourse loans work. They've been doing it for a long time. And I appreciate them because they're in an industry where typically when you're talking about banks, and you probably agree with me on this, Matt, most banks are so in the box, they don't like to do anything creative. So you don't find a lot of traditional banks that will have the loan products that you guys offer. But I think you guys saw that as an opportunity to offer, these loan products to people that really need them. And I just want to thank you guys for being that tool in the toolbox for our clients to reach out to when they're looking for non-recourse loans.
Nate, thank you for having us on again. We've had a long-standing relationship with NuView and yourself. And I agree wholeheartedly that, we work well together because your clients are looking for different avenues, different resources to bolster their retirement plan. And this is just another option for them that can really help speed up that growth by using debt leverage to purchase real estate within your self-directed plan.
Yeah, and I talk about it a lot. If for the regulars who watch this program, you guys know that I mentioned non-recourse loans and a lot of the different case studies that we talk about, and those are real case studies from actual clients. I'll remind all the listeners, we're going to do a Q&A immediately following Matt's presentation. But if you have questions as he's going along, type them into the chat box so that we can either address them right away or we can get those answered at the conclusion of his presentation. So again, type it into the chat box and we'll get to those afterwards. And Matt, I'll let you take it away from here.
Okay, great. Thanks, Nate. I just want to confirm, can you see my screen okay?
We can, yep.
Okay, great. Well, again, thank you for having us on. We always appreciate the opportunity to talk in more detail about non-recourse financing because it is one of those topics that's not very well known in the self-directed industry. It's become more relevant over time, but still so few people, investors, I should say, that know about fully utilizing the self-directed plan, know that there's another step that they can take to really, as I mentioned, expedite the growth in their retirement, whether it's a Roth IRA, traditional IRA, or whether it be a solo 401k plan. So this afternoon, in the coming minutes, just want to go over a presentation I have on the specifics of non-recourse financing. And then Nate mentioned afterwards, we'll take a Q&A to any questions that I may have not answered during the presentation. So the first thing, as you mentioned, I'm Matt Allen with North American Savings Bank. I've been involved with this type of lending since 2005, and that's when we officially launched this program. We felt there was a need for non-recourse financing. One of our deposit branch customers came to us and they wanted to buy 2 duplexes in the Kansas City marketplace with their self-directed IRA, but they only have 50% of the purchase price. So they needed to use debt leverage to acquire those 2 duplexes. But the catch was it had to be a non-recourse loan, and they didn't have any options besides using a hard money lender or a private lender. And if you've ever dealt with either one of those options, you know that the interest rate can be very excessive, and there's always points added on, whether it be 2, 3, 4, 5 points in a hard money lending situation. So it doesn't make sense a lot of times when you look at your rate of investment. So we took a deep dive into this, talked to their IRA custodian, and ended up lending on those 2 duplexes. And that really prompted us to think about how can we provide this type of product on a nationwide scale for investors that don't have any other outlets. So since then, I've been promoting that. Glenn Mather, who founded NuView back in 2003, we met in 2005. So like I mentioned, we've had a long-standing relationship where they understand the ins and outs, and then we can come in on the financing piece. So high-level overview of what the presentation will entail. What are the advantages of using debt financing? How do you acquire a non-recourse loan? And then what are the typical guidelines, parameters that a lender is going to look for? Because it is a different type of transaction, and we want to simplify it for you. We don't want to make it a harder experience when in all reality it really isn't. So we'll explain what the differences are and then how you can take advantage of it. North American Savings Bank, for those of you not familiar with us, we've been around for almost 100 years. We're based out of Kansas City, Missouri. We have deposit branches throughout the KC metro area. Lending Tree, I'm sure most of you are familiar with Lending Tree. Every year we've been top 1, 2, or 3 lenders on that type of platform. So we lend on a nationwide scale, $3 billion plus on the conventional loans or VA loans. So we're heavily integrated throughout the United States with lending, and then this is just another niche product that we do offer. So when you purchase real estate within a self-directed IRA plan, and when I say self-directed IRA, I'll typically mention IRA, but just know that that can also be a self-directed 401k. It can be an IRA LLC, any plan that's self-directed, we will lend to. So you really have 3 options. You can, 1, purchase that home or that piece of real estate outright. So $100,000 single family home, you pay $100,000 from your plan, and then you own that home free and clear, vested in the name of that IRA. Your second option is to partner with another investor. So you have, say, another self-directed IRA investor. You have that same $100,000 scenario. You both put 50% down or $50,000 each. You own that home free and clear. Having a tenant in common situation allows you to acquire that and still pay cash without the non-recourse loan. And then the third option, which we're going to discuss in detail, is the non-recourse loan option. So what happens if you have $300,000 purchase, you only have, let's say, $150,000 to $160,000 in your IRA plan? Well, how can you put, say, 40% down leverage the remaining amount, allow you to buy that $300,000 home instead of limiting yourself to $150,000, $160,000 purchase price. So as we mentioned, you don't have enough money for the down payment. I'm not assuming not the down payment, but the entire purchase price. You have to look at other options. This type of product, non-recourse loan, it does have its differences that can be explained in publication 590 of the IRS code. If you really want some dry reading, this is where you would want to start. But to wrap it up in a nutshell, you can't use your IRA as security for a loan. So you can't pledge that IRA as collateral for the actual purchase, nor can you give a personal guarantee. So the only collateral for this type of transaction is the real estate itself. So if something happens, the loan goes into foreclosure and it's non-recourse, the lender can only go after the home, take it back, sell it, and hopefully recover all their at least the minimum loan balance that was still to be paid by the borrower. Non-recourse loans, well, you may live in California and say, well, that's all transactions are non-recourse. And that's true to an extent, except your non-recourse in California, they're not going to lend to retirement plans. It's lending to an individual versus an entity or a self-directed IRA. If you were to talk to, a lot of the big lenders out there, Wells Fargo, Bank of America, US Bank, they don't offer this product, and I don't believe they'll ever jump into this arena. They've had an opportunity to the last 15 plus years, but for the time and effort it goes in to research it, to really understand it. And then I would say the loan volume, they're looking for excess amount of minimum loan amounts where it doesn't make sense for a large bank to get involved with that. Where North American Savings Bank, we're a mid-sized bank, we're a heavy portfolio lender, so we do keep 100% of these loans in our own portfolio. We're not going to sell them in the secondary market. So that's an advantage for us, and really it was just a seamless transition where we understand it. So this is just something that we feel comfortable moving forward with. This slide, I've mentioned, already explained in detail that the security instrument allows no recourse against you personally. And so with that, I'll also mention one thing. If you're a seasoned investor and you own multiple investment properties, you probably realize there's a cap. Usually it's 4 properties that you can receive debt financing on, where you go outside the conforming loan limits, not loan limits, but the conforming number of loans you can have. Where this type of loan, since it's acquired to, I guess we're lending to the IRA, it doesn't show up on your credit report. So that's an advantage. It's not going to count towards your debt to income ratio on future purchases. So again, one of the small differences that I always like to bring to people's attention. So the advantages of using debt financing, all the net proceeds go back to that IRA. So this is what NuView is trying to sell, the self-directed industry is trying to sell, that you're not limiting your investment choices to only stocks, bonds, or mutual funds. You have all these options besides life insurance and collectibles that were mentioned with Nate's slides. So how can you get creative? How can you find something that's maybe a niche, but something you understand and know well, such as real estate? A lot of realtors, real estate investors, they just look at this as another opportunity. Instead of buying in their personal name, for earning that 7 to 10% rate of return, why not put it in our retirement plan where it can grow tax-free or tax-deferred? So you really can benefit from that. And ultimately, the main reason is tax benefits, which again is a great option. Tax liens, you can be the lender, be a bank, lend to individuals. So there's a plethora of options. Real estate is one of the more popular ones right now. And also by using debt financing, instead of only buying that one piece of real estate, use debt financing, you could buy 2, 3 properties using leverage. So what's the typical down payment? Because it is non-recourse, you know, a lender, there's more risk involved because of that aspect. You're not having somebody guarantee the loan personally. So we typically require minimum 30–40% down on single family homes. And there's a couple of reasons why we do that. One is the fact that it's non-recourse. And the second thing is how we're qualifying these loans is based on the cash flow. And typically, if you have a investment property, you're only putting 10% down. You normally don't have positive cash flow. I guess I'd say it's rare that we see that. So by putting 30–40% down, you are increasing your debt service coverage ratio, which we will go into more detail on a couple later slides. But the minimum down payment requirement for single family homes, as I mentioned, is 30–40%. 2 to 4 units, 40%. Same with condos and multifamily. We typically don't lend on anything greater than 8 units. You know, we have a commercial department at NASB where they could take that on. So I guess we have that. It's just you're going to be dealing with the commercial side, and you know, minimum loan size of around 500–600,000 if you are looking at a larger complex. Majority of our transactions are for single family homes. Do see some 2 to 4 units, but not many. Condos, that's pretty frequent too. Now, the main difference when you're drafting your purchase contract, and keep this in mind, is it's always better to draft it correctly on the front end. I know that sounds pretty obvious, but it'll eliminate a lot of headaches further down the road. So if you've identified a home you want to make an offer on in your self-directed IRA, make sure you set it up in the correct format: NuView Trust, you know, FBO, Matt Allen IRA, and it's going to remain that way for the duration of the ownership. If you were to make that offer in your personal name, most likely you would have to go back, redraft that correctly. It's always cleaner to do it than adding an amendment or an addendum to that purchase contract. So it's going to remain in the IRA as long as you own that property. And then when you do sell that home, 100% of the net proceeds will go back into that IRA account. We do lend nationwide. We are a federal savings bank, so we have that option. Sorry for the background noise. I have a couple of dogs that are not cooperating. But we lend nationwide scale. New York, I would say, is one state that we look at a lot closer. It's due to the foreclosure laws that we have in that state. Sometimes it can take a lot longer for that to go through the foreclosure process. We've had one that's been in process for 7 to 8 years, so we're not receiving any payments for that duration. And sometimes it's a tough pill to swallow. So we're going to make sure if we are lending in, you know, New York or a couple other states that we have the right situation for all parties involved. Time frame for a non-recourse loan. Typically, it is 30 to 40 days. You know, that's from the date we receive the application from you. You can order the appraisal. So it's something to just keep in mind when you're making that offer, that you know, there's a little extra, I'd say 2 or 3 days that you need to factor in that's not typical with a purchase in your personal name. And that would be, let's say you live in Texas, you're buying a piece of real estate in Missouri, and NuView is in Florida. So both you as an individual have to read and approve all the closing documents sent by the title company, and then you have to send them to Florida for NuView to sign, and then they go back to the title company when both signatures are on there, the custodian and yours on a personal level, and then that's when the loan can fund. So just, you know, right now there's a lot of delays with appraisals. Everybody is extremely busy in the mortgage industry, the real estate industry, due to, you know, the interest rates being so low. So talk to your realtor if you're using one, and just set expectations on the front end that things are moving a little slower than they have been. as rates stay low, it's probably going to remain the case. Type of loan programs available. We offer a 10-year ARM, 10, 15, 20-year fixed. They are principal and interest payments. We do require escrow for taxes and insurance. So when you buy real estate in your IRA, the IRA is responsible for all expenses, and that includes your real estate taxes, your hazard insurance, your HOA dues if they're applicable. And then if you have that, leaky roof or some hole in drywall needs to be fixed, all that has to come out of that retirement plan. So just keep that in mind as you're setting up this type of transaction. Along with purchases, we also offer, we consider a cash out refinance. So let's say 5 years ago, you bought a single family home in Texas, and now you've identified another one you want to purchase. We have all this equity in that home you originally purchased. You can get a non-recourse loan, so all the proceeds from that loan go back into your self-directed IRA, and that would allow you to pay cash for another piece of real estate or any asset, to be honest with you, that you wanted to place in your retirement plan. So that's an option. Again, very similar guidelines and parameters for a cash out refinance. Again, just most people didn't know of that when they paid cash for something in the past. Eligible properties. So, we typically stick to properties that are not unique. So I would say something that's marketable, easier for us to sell, which a single family home is. And something for you to consider also too is when you're acquiring assets, real estate assets, the more unique it is, the less buyers you're going to have, potential buyers you'll have for that opportunity. So a single family home, vanilla home, there's a mass audience for that type of product. Same with condos, PUDs, townhomes, duplexes. More importantly is the second slide, where what we really don't lend on, which we rarely lend on, large acreage, which over 5 acres, 10 acres, something we'll probably pass on. Raw land, and a big reason for raw land is that there's no tenant occupying that, so there's no rental income. Now, you can still buy raw land in your retirement plan, say for crops, but just know that it's going to be hard to find a lender to help facilitate that transaction. Manufactured homes, condo hotels, co-ops, the list there, a lot of them, again, they can be great opportunities and great investments, and I've seen over the years all these utilized. But again, private lender, hard money lender would be your only option. So when you're qualifying for a non-recourse loan, it's simplified in the sense that we're not looking at you individually. So we're not looking at your income, your employment. We don't even ask. It's irrelevant for this type of transaction. We really just want to make sure there's 3 things for qualifying. Do you have enough for the money in your account for the down payment? Does the property cash flow? And then do you have enough for reserves? So those the 3 important ingredients. And I guess I would also add the collateral, since it is a non-recourse loan. We want to verify that the real estate you are purchasing is in rentable, livable condition at the time of purchase. And we will verify that with a full appraisal. And then we'll also get rent comps with the appraisal, just to confirm what the going market rent is at that time. So to give you an example, let's assume you've identified a $180,000 single family home in Texas that you want to make an offer on. Going market rent is $1,600 a month. And then all these expenses we list out, your vacancy, your real estate taxes, your hazard, your maintenance, a management fee. We use these in our calculation, subtract those out from the gross annual income, which gives us our net operating income, or NOI. Now let's assume you put down 40% and at 5.75 interest rate, your annual P&I is around $9,000 a year. So our NOI divided by our annual P&I gives us a 1.55 debt service coverage ratio. So 1.0 is the break-even mark. And we like to see a 1.25 or greater for real estate. So 1.55 meets all that requirement. And this is something we would most likely lend on, and would be a good situation for both the investor and the lender. As I mentioned, we're going to order a full appraisal, and then they usually will provide us 3 rent comps. So if 1,600 is the expected rent, but the appraiser comes back with 1,200 a month, well, there's a big disparity there. And so we would have to look at it a little bit closer. We may require more money down to improve that cash flow. So that's how a situation could change if what we were expecting in the front end is adjusted with the appraisal. And also, as I mentioned, escrows for taxes and insurance are included in your monthly payment. These are the estimated fees typically we'll see with a non-recourse loan. When you're looking at a piece of real estate, what I recommend is we have a loan committee for this type of product, and we can evaluate it typically same day. So we have a 1-page form that we would ask that you fill out, and I'll give the contact information in the last slide. And really, it's just basic information: property address, taxes, insurance, so we can run our analysis, and we can tell you if it's essentially pre-approved before you make that offer. So that is something that will give you that benefit going in, knowing that we've already looked at it. It really just comes down to a valid appraisal and confirmation that you have enough funds in your account for the down payment reserves that are required. We also have a book on this that Nate mentioned that kind of gives you the nuts and bolts of self-directed IRAs, non-recourse financing, what are the tax implications, and how to use a CPA or properly, ask the right questions, prohibited transactions. So if you would like a free copy, digital copy of this, the email address listed there, iralending@nasby.com. We're more than happy to send you a free copy. Hopefully you'll gain some knowledge out of that and get you on the right path to start investing with your self-directed IRA. Again, reach out to me with any questions. I know we're gonna have a Q&A here for a second, but we also have a dedicated team that can answer your phone calls and go over your specific scenarios. So with that, Nate, I will pass it back to you, and we can open up for questions.
Thanks, Matt. Yeah, we've got a whole host of questions coming in. So let's just roll right through these. And obviously most of these are for you guys. I'll just start from the top. Rolando, thanks for joining us. You got a couple questions here. What are your typical loan terms? I think you kind of went over this earlier, but can you just maybe retouch on the loan terms and the products NASB provides?
Sure. So we offer a 10-year ARM, a 10, 15, and 20-year fixed product. So, interest rates are right now between 5 and 5.75%. There are non-recourse, so they're going to be a little higher than owner-occupied primary residence loan or conforming conventional loan. But again, they're very competitive, because of the non-recourse component, they are going to be higher.
Yeah, and honestly, look at the course of history. 5.75 is not a bad interest rate at all, especially when it's fixed for such a long period of time. And the way that inflation is going, it's almost free money. If you look at it from that point of view. Question that I had actually, Matt, do you guys have any preference as to whether or not the asset is, I guess, or the IRA owns an LLC that would own the property, or do you guys prefer that it just be titled in the name of the IRA? Maybe can you address that?
Sure. So either option is fine. We'll lend to the IRA or to an IRA LLC. If it is an IRA LLC, we'll request to see the LLC documents, the operating agreement, the articles of incorporation, letter of good standing, those items. And then, want to confirm that the IRA really did invest in that LLC, is a member of the LLC. So again, both options, there's really no difference as far as qualifying for with the property. It's just how we're going to set up title.
Got it. And one thing that I'll just remind people also, and we talk about this on a lot of programs, so I don't want to get, too off in the weeds, but depending on, how you're structuring your investment, your IRA may be subject to unrelated debt finance income tax. So it's something to be aware of, not something to be scared of. I will tell you, in my 10 years of seeing people use non-recourse loans to buy real estate in their IRA, the taxes that the IRA incurs when it borrows money, it's a lot less than you would think. Just make sure you have a good CPA that can calculate the taxes for you. But there's also ways to structure it where you might not have to pay unrelated debt finance income tax. And that would be for people who are self-employed. If you're using a solo 401k, there's an exemption to that unrelated debt finance income tax. So there are, options for certain people using different types of qualified plans that you might not have to worry about it. But at the end of the day, taxes is not the end of the world, and it shouldn't deter you from doing an investment. What you really should be looking at when you're looking at putting real estate, for example, in an IRA, is you should really be concentrated on your cash on cash return. And a lot of times when you actually calculate the cash on cash return by just using your IRA as a down payment, the cash on cash return could be exponentially higher than if you just bought one house all cash and tied up all your retirement funds into one investment. So it's a numbers game, right? Real estate's a numbers game. So you just want to calculate that out. Don't get this fear tactic that people tell you, oh, but you're going to have to pay unrelated debt finance income tax. Trust me, it just depends on the situation. It depends on obviously the property and yada, yada, yada. The reason why I want to bring that up, because we have a question from Sophie, and maybe you can add, because I have my answer, but I haven't verified it because I haven't had a client do this yet. Sophie asked, can this type of transaction do a 1031 exchange? Now, what a 1031 exchange is what people usually use to defer the capital gains tax when they buy and sell real estate. Now, in an IRA, you typically don't need a 1031 exchange because your profits already aren't subject to capital gains tax. But in the event that your IRA borrows money and it's not in a 401k, then your IRA is subject to some capital gains tax if you sell the property and there's still debt on there. So from my understanding, you can use a 1031 exchange to defer the taxable portion of it. I haven't seen a client do it yet, but Matt, maybe you have some insight as to whether or not you know of a client that has used that option?
I don't, I've heard it brought up in the past, but I don't know anybody that's actually taken advantage of that. With the UBIT tax, I would say in the book that we have available, there are a couple chapters written by a CPA, and he compares personal versus self-directed plan, the costs, the expenses, the tax implications, and it outlines it in an organized way that makes sense. So I would say read that. And then if you have further questions about a 1031 exchange, I don't want to offer any insight that's inaccurate. I would, it's a CPA question for them. See if it makes sense for your situation and if it actually is applicable.
Thanks, appreciate that. And you, Rolando, got another question. I know you touched on this, but if you want to add anything to it, but do you also offer refi cash outs with the same, and is it the same LTV ratio when you do a cash out as a purchase?
Yeah, so we do offer the refinance cash out if you own the home free and clear, or say you have a small loan already on it and you want to pay that off with a better rate or whatever your situation would be. So yeah, it's the same LTV, really no difference, except we're not dealing with a seller for the transaction.
Got it. One other thing that I want to mention too, and Matt accurately pointed it out, that your IRA, always remember that when your IRA owns an asset, especially an alternative asset, when it comes to the fees or expenses associated with the asset itself, that those must be paid out of the IRA. So, or by a non-disqualified person. And the reason I want to bring that up is, if you have to pay for an appraisal fee up front, before the application gets started, you should be using your IRA to send that payment. Now, in the event you are wheeling and dealing and you want to, get an application in and see if, you can even make an offer on this property, what I would stress to people is still do not use anything personally to pay for that. Use somebody else that can help you in that situation, like a non-disqualified person. Grab your brother's debit card or something. Just don't use your own money, because the way that the IRS is, and I'm going to address this here in a second, the way that the IRS is attacking IRAs these days, you want to be very, very cautious that you play by the rules and don't do anything that might get you into hot water. So anything you want to say on that piece, Matt?
No, I would agree. Just make sure everything's clean on the front end. If you can avoid any potential, like you said, putting the down payment with your credit card or earnest money, it makes things more complicated. You have to unwind it typically. So if you have, you've got an offer you need to make immediately, I would still try to find a way to get the IRA involved on the front end with the earnest deposit.
Yeah, and if you work with a custodian that understands this stuff, like NuView, just reach out to us. We'll work, as fast as we can work to get a payment out. You usually just have to, request a payment authorization and we can pay it directly. So just make sure you keep your IRA custodian involved, and we'll help, get the transactions. And NuView and North American Savings Bank have been doing this for many, many years. So if you encounter a problem, we've probably seen it 100 times. So just call us and we could probably get you through it and get you over that hump. Sophie, some more questions. Yeah, I am going to touch on the tax bill here. I don't want to take away from the main topic though, but I will touch on that in a second. And then we will share the PowerPoint if you want, or Matt, is there a way that if somebody wants a copy of the PowerPoint, they can reach out to you? What I would also suggest to people is we have this recorded on Facebook that's available to rewatch at any time. So if you got Facebook, just follow us on our Facebook channel, and we always upload our videos to YouTube as well. So anything you want to add to that, Matt? I know you offered the book and all that, which is great.
Yeah, if somebody would like a copy of the PowerPoint, just the same email address requesting the book, just mention you'd like a copy of that too, and we'll more than happy to email that.
Awesome. I think that's really it for the questions. Matt, I want to thank you for joining us today. I know you're a busy guy, but I just thought it was valuable to, bring in the leader in this whole non-recourse loan industry. And you guys are definitely the leaders, and you guys continue to, impress all the self-directed IRA custodians to have clients using you guys. So again, I want to thank you guys for all that you do for us and our clients.
No, thank you for having us on. Always appreciate the opportunity, and enjoy working with NuView and all your clients. So again, thank you very much.
Awesome. So make sure to check Matt out. Make sure to check out NASB. If you want to stay on, you can, Matt. I'm just going to go over some final announcements and talk about the tax bill. But if you got somewhere to be, don't worry about it.
All right, I'll stick around.
Okay. All right. So what I want to do is just wrap up some announcements. And I do want to just talk about the proposed tax bill because we are getting a lot of questions on it. I know it's hot on everybody's radar. I'm going to just touch on it briefly here. And I'm going to probably do a workshop or a video that goes more into detail afterwards. But we are getting a lot of questions. So it is important to understand what this proposal is. And if you guys aren't familiar with what I'm talking about, Google Ways and Means proposal and look to part 3 of the proposal where they talk about IRAs and retirement plans. The tax proposal is the $3 trillion proposal by the current administration. And there's a lot of things that it talks about where it's going to change the scope of how IRAs and qualified plans work. I will say, without getting political, it doesn't matter what side of the aisle you sit on. There's a lot of things that are going to affect anybody that has an IRA and even 401k. I kind of just pulled out some of the things that jumped off the page to me, and I've read the summary, and I've also read the bill itself, and several times over. Because again, a lot of the wording can be confusing sometimes. You got to reread it to double check, So one of the things that they're obviously targeting is they're targeting a large value IRA. So, and those would be IRAs, totality of IRAs and qualified plans where someone would have more than $10 million in wealth. Is it shocking? No, because they've always made mention here or there that the IRS kind of, has I guess, they look deeply into these IRAs that have more than $5 million of wealth. So putting it at 10 million, actually, I'm surprised that they did it that high. Does that affect most people? No, it affects the Peter Thiels of the world. It affects people that have super, massive wealth in IRAs, and it's going to hit them pretty fast and pretty severely. Where if you have an IRA valued above $10 million or IRAs and combined valued above $5 million, and you make more than $400,000 a year, they're going to require us to take distributions of the excess. And how they calculate that, 50% of what you're in excess is going to be a required distribution. So for instance, if you have a $15 million IRA, and you make more than $400,000 a year, 450 if you're married filing jointly, you would have to take a $2.5 million distribution to satisfy that requirement. They will not hit you with an early distribution penalty, but you can see that there's a lot of concern that they are putting caps on what you can make in a retirement account, which has a whole, lot of concerns. But again, doesn't affect a lot of us. The things that do affect a lot of us are the things that they have where specific to Roth IRAs. Now, I saw this one coming from a long time ago, and I've been saying this on programs for many years, is at some point they were going to put back on the income limit for Roth conversions. That's not a surprise to me. So, but this again doesn't affect anybody making less than $400,000 a year. But if you are a high income earner, if the bill passes as is, you will no longer be able to convert traditional IRAs to Roth IRAs. So again, that's if your income is above $400,000 a year, and if you're married filing jointly above $450,000. What it also mentions in the plan, which is even more concerning because this affects a whole lot of people, is it prohibits employee after-tax contributions in qualified plans and will prohibit in-plan conversions regardless of your income. So this affects people that have 401ks that want to make after-tax contributions as an employee to their 401ks. It affects solo 401ks, especially people who are fans of the mega backdoor Roth, where you make employee contributions, after-tax Roth contributions, and then you make additional after-tax contributions to max out your 401k and then convert that to a Roth. That's going bye-bye if the plan passes as is. And again, this is all proposal, but it is concerning to say the least. And we do want to take this and do something about it, whether it's writing letters to your congressman and yada, yada, yada. So other things in this bill, it's going to restrict IRAs from investing in any investments which are offered to accredited investors. This affects a lot of those hedge funds and those private offerings where people are raising money from IRAs, and they're requiring the investors to be accredited investors. Now, what an accredited investor is, you have to have a certain amount of wealth, have a certain amount of education, or make a certain amount of money. And currently, you can use your IRA, as long as you are an accredited investor, personally, you can use your IRA into these investments. If the bill passes as is, that's no longer going to be an option for you. So anybody watching this that is raising private capital from IRAs, you want to take heed to this bill as well and write your congressman about how it's going to hurt a lot of people. The other thing it does is it's going to restrict IRAs from investing in anything, whether it's in a corporation, a partnership, trust, or estate, where the IRA owner, and I would assume disqualified people, own more than 10% or more of that entity. Currently, the threshold is only 50%. So what I mean by that is if you personally own a entity, and let's just say it's an entity that owns real estate and you want to partner yourself and your IRA in that deal, you could go 50-50 with your IRA and that's no problem. Well, now going forward, if the bill passes as is, you can't own more than 10% of that entity, which is going to cause a real wrinkle in people that are using entities to buy and sell investments with their IRA, and they're partnering with other disqualified people. The other thing it's going to do, it also targets people who are investing in an entity where the IRA owner is an officer. So bye-bye checkbook control LLCs. Am I shocked by this one? Not at all. I've been telling people for many years that based on what I was seeing, that they would target this at some point. More because, when you invest your IRA into an entity where you're the managing member, there's no oversight at that point. Now, there's a lot of people that use this and a lot of NuView clients that use this that understand the rules and they play by the book and they understand what their IRA owned LLC can pay for, and they're not supposed to take any personal benefit from. But I guarantee you that there's a lot of people that don't play by the books, and the IRS has been collecting data on these checkbook control LLCs since 2015, when they changed the reporting requirements for IRAs to tell them whether or not the IRA is invested into an LLC or not. So I knew this was coming, didn't know it was going to be this quick. And this is just some of the highlights. What I would urge you guys to do is look up the Ways and Means proposal, and I'll post the link in the description here after the program. And I'll also post another link where it gives John Heyer, a good friend of ours, who's a tax attorney, very one of the brightest guys in the industry when it comes to self-directed IRAs. He put out a great article that kind of summarizes it, but also has some resources to write your local congressman and tell them specifically how you feel about this proposal, because I understand where they're coming from and why they were doing it. They're afraid of these Peter Thiels getting by with $500 IRA investments and turning it into $5 billion. But the way that they're going about it doesn't seem to solve just that. It seems to affect even the small guys, people that are just trying to invest in alternative assets, trying to invest in multifamily investments that they're getting great returns on, targeting the people that are using checkbook IRA LLCs, targeting people that want to make after-tax contributions to a 401k. I don't see how that it solves the Peter Thiel problem. So again, and I don't want to get too opinionated on it, but if this is hot on the radar of everybody, I will say that you want to reach out to your congressman. If you're not happy with it, let them know. And if you don't, just realize that these rules are going to come fast and swift. So most of these laws, if it passes, would take effect just after December 31st, 2021. So we're talking next tax year, a few months from now. So just wanted to touch on that because a lot of people have been asking about it. Again, I'll post a link in there to give you some resources if you want to read it yourself. It's a fun read. So just wanted to touch on that, and we'll have some more videos and education coming out about that as we go. So with that being said, I will say that there's going to be a lot of opportunity to use, self-directed IRAs in some capacity. Is the bill a little bit scary to the self-directed IRA industry? Yeah. But there's also some areas that aren't targeted that I will mention. There's no mention to HSAs. There is no mention to ESAs. There's other tax, structures or tax exempt vehicles that people, I would say, don't use enough, that might need to start looking at. And even if you don't have if you don't have an IRA, now's the time to start one. I will tell you guys, if you don't set up a solo 401k, if you're self-employed, if you don't set up a Roth IRA, if you don't set up an HSA and start contributing to these things sooner rather than later, you might not ever be able to contribute to these things ever again. And again, I hope the bill doesn't pass as is, but if it does, don't say I didn't warn you guys. So again, if you need to set up accounts and get contributions in before or do conversions, if they're going to do away with in-plan conversions on 401ks, you better get those conversions done this year, because next year you might not be able to. Reach out to us. We'll help you guys any way you can. Make sure they use that promo code 5050. We'll waive the account opening fee for any account you want to open. We'll also give you a $50 credit towards future fees. I don't know how other way to say it to you guys, but that's incentive. If the bill isn't incentive enough for you guys to open an account, then at least the promo should be. So now's the time to do that. Reach out to my IRA specialist at IRAspecialist@NuViewTrust.com. Just say, I want my 50/50 promo. Again, that's IRA specialist with an S NuViewTrust.com, and we'll get right back to you and get that account established for you. And then final announcement is I want to remind everybody that we have a networking event, which is our quarterly event, our Night with NuView event, October 27th. It's just about a month away. We're doing it in Maitland at a place called the Venue on the Lake. It's a great venue, fits about 220 people. We're going to pack the house because we're bringing in a special guest speaker, Rod Khalif. If you don't know who Rod Khalif is, look him up. He has the #1 commercial real estate podcast on iTunes. He has a ton of education out there with high reputable people. He's a multifamily influencer. He does all sorts of stuff, and he's agreed to come in and speak as our speaker, our special guest speaker at our Night with NuView. So it's free, guys. It doesn't cost anything to attend. So click on that URL. What is that? What do you call that thing, Grace?
QR code.
QR code. Sorry, I got my Grace right here. So that QR code, put your phone up to that. It'll take you right to the registration link, or just go to our website, NuViewTrust.com, go to our education resource page, and you'll find a place to register there. Make sure you guys attend. And if you want to sponsor that event, reach out to IRA specialists at NuViewTrust.com. We are looking for a couple additional sponsors if you want to have a booth set up, yada, yada, yada. But October 27th, 6:30 to 9:30, Venue on the Lake. There'll be food, there'll be beverages, there'll be Grace, there'll be Tom, there'll be Nate, there'll be Rod. You guys better not miss it. And it's free. So register for that event. And if you guys have any questions, again, just shoot us an email, IRA specialist at NuViewTrust.com, and hope you guys have a great rest of your Wednesday, and write your congressman about the Ways and Means proposal. Please do that for everybody looking to have investment options in their retirement account and not have that taken away from us. So see you guys next Wednesday.